Thanks, David. Good morning and welcome to Radio Ulster's consumer programme On Your Behalf. I'm Nicola Weir, standing in for the lovely Linda Macaulay, who is away on a well-deserved break. We'll be exploring some of your taxing challenges, from getting the right tax code for students to understanding the pitfalls of inheritance tax. Advisor Adrian Huston is in the studio with me. He's going to be very busy. Get those queries and questions in now. And it should be said right at the beginning of the programme, there's going to be a lot of information coming your way. So get those pens and paper out to jot down those all-important telephone numbers and email addresses we will be throwing your way throughout the programme. Well, this week, the HMRC issued a warning about tax refund scams. It seems criminals are trying to make the most of the end-of-year tax refunds. The tax authority says scam emails and text messages are being sent out to trick the public into thinking they have received a tax rebate. So that you hand over your account and personal details. Now, it has said HMRC only informs you about tax refunds through the post or through your pay via your employer. All emails, text messages or voicemail messages saying you have a tax refund are a scam. Do not click on any links in these messages and forward them to HMRC's phishing email address and phone number. And I hope you got your pens and papers out. So those all-important details to send your concerns, or if you have received those messages via whatever method, it's this. Phishing, which is spelt PHISHING, at hmrc.gsi.gov.uk and text to 60599 or contact Action Fraud on 0300 123 2040 to report any suspicious calls, or use their online fraud reporting tool, which is www.actionfraud.uk/report_fraud. What a mouthful. And with this in mind, what better way to begin the programme than with tax advisor Adrian Huston, who joins me in studio. You're very welcome to On Your Behalf, Adrian.
Thank you, Nicola.
Adrian, you really need to be on top of your game when it comes to these scammers. They're really inventive. In fact, I got a call last week to say I was going to be arrested because I owed money to the HMRC and I had to get in touch with a very strange number. I suppose you probably hear this all the time, do you?
Yes, they're constant, and nobody is immune from these. I get these emails saying I'm due a refund, or these texts. The texts are probably the most dangerous one because people know to be wary of emails. But when you get a text and it says click here to progress your refund, it's so easy when we're maybe a little bit distracted to just click on it, and you know that in itself could even be bringing a virus into your phone, your smartphone. But you must never engage with these things and never give your bank details, etc. over, because at the end of the day, they're not wanting to give you money; they're wanting to empty your account. And the HMRC's advice is absolutely spot on. They will never contact you by phone, text, or email.
And it's also a little bit threatening when you do get a telephone call, and this one went through to my voicemail saying, you owe money, we are now going to issue a warrant for your arrest. And that can be quite sinister.
Yep.
And somebody may fall for that because they might think, oh my goodness, I better ring this number. And the chances are that number is probably going to cost you about £50 a minute or something like that.
Exactly. And they're playing in people's concern. I know, having been in tax for 30 years, I know that when I said people I was a tax inspector, that raised anxiety in the person I said it to. But if I say I'm a tax consultant, it still does. Everyone feels slightly uncomfortable about tax. And so if they've got a discomfort because they're worried their tax code's wrong, or they know they're a week or two late paying their tax bill, and they receive a call like you did, Nicola, then they're very likely to lift the phone just to make sure they're not making things more difficult. But the revenue does not act like that. They will not ring you to say they're about to jail you without you having had a number of months and probably years of correspondence on paper about your tax debts. So it will not happen, but it is very alarming to receive those calls.
Well, Adrian, we have a question from a man in his 60s. He wants to know, what is the threshold for inheritance tax and how is it applied? He says he has 3 siblings. His mother passed away years ago and his father is in the final stages of dementia. The family are providing for their father's care, and this has raised issues around his assets and how best to protect his savings, something he says his father was adamant about. He says his father worked hard and saved well, having acquired nearly £200,000 in savings, which included an earlier inheritance from a sibling, and he also owns his own home, which is now worth around 180,000. He says the family would like to know, what are the rules regarding inheritance tax and their potential liabilities.
Okay, well, if we could just stay on air till about 11:45, we'll be able to cover inheritance tax.
I can't do that now.
But in essence, this man, I don't think he has too much to worry about. The situation is that the inheritance tax threshold is 325,000, but that's per person. So if, for example, when his wife died, no matter when that was, it should have been 40 years ago, if when his wife died she passed all her stuff to the husband, then when he dies he gets her allowance as well. So in other words, his estate, if it's under 650,000, there will be no inheritance tax.
Right.
Inheritance tax at its simplest is a tax on the value you have when you die plus the value of gifts in the last 7 years. Some gifts are exempted, but in general terms, you have to look at your value at date of death plus the last 7 years. So there's nothing here suggesting this man's given a lot away. So if he's worth about 400,000 now, assuming he got all or much of his wife's stuff when she died, he will have at least a £650,000 inheritance tax exemption. There is a further relief in relation to your private residence. It is unfortunately slightly restrictive in that you have to have passed it down. It have to be passing it down to the next generation. So you can't be giving it to your brother or your sister or your parents. But if you're passing down to your children or your grandchildren, your private residence, then there's another 125,000 of relief. So for the man that's alive, that's 325 plus, assuming he's passing his house to a child, then there's another 125, gives him 450,000. And the same actually applies for his wife, even though she's long gone. So you end up with a married couple there, potentially with an exemption of £900,000. So there's very little for this man to worry about. And in essence, the way inheritance tax works, if you're over the limits, then the excess over and above those limits is taxed at 40%. So it is something people want to get right, and they want to plan about it early. The one thing I'm interested in is this man says his father worked hard and was very concerned about preserving the savings. But he's now got dementia. Did his father set up an enduring power of attorney? Everyone in this room and everyone listening, if they're an adult, should have an enduring power of attorney.
This gentleman says that he has that.
Right, excellent. That's fantastic.
If you could explain what that means.
Yes. An enduring power of attorney is something you set up while you're alive, and you have to be mentally competent. So once you've got the start of dementia, it's too late. But you set it up, you sign it, and you have 1 or 2 people who have agreed to take on this responsibility. And it effectively says, the normal one is that if I lose my mental capacity, if I lose my marbles, I trust this person to look after my affairs. It'll stay on the solicitor's safe until you lose your marbles. Then you'll get the doctors will send the evidence to the solicitor, and the solicitor applies to the court. The document gets stamped. That then means the person who agreed to take on that responsibility has full power to deal with your assets. So they can send in your tax return, they can close bank accounts, open bank accounts, sell property, buy property, sell investments. They can do everything. So you don't give that responsibility away lightly. But it does mean that even if you've lost your marbles, they can still be doing things which will maybe help your tax position or help your financial position.
A very interesting thing you said there is if you have had a diagnosis of early dementia or early Alzheimer's, you won't be able to do that. You
have to be mentally competent. So I guess it depends how early you are in the stages. If you sort of have periods of lucidity or clarity, then you may still be able to sign it, but it's getting into a difficult area because if you've got early stages
it would really be down
dementia,
to a doctor
people
to
could try
clarify
to
that,
challenge
would
it.
it?
You're going to have to get a doctor to reassure the solicitor in a letter or whatever that having examined this person, they feel they are mentally competent to sign the document.
Okay.
But it is something to do early. My wife and I are both in our 50s. We've had them for many years, and it's a simple document to have, and it's just very reassuring to know that if something goes wrong, someone has your back.
Does it cost much to get that?
Virtually nothing. It's a template form. You can get it yourself, but I would always get it processed by a solicitor. But it's a template form. You fill in your name and details, the people who are going to look after you, name and details. Everyone's signature has to be properly witnessed. So I would have thought a decent solicitor wouldn't be charging you more than £200, £300 because it's a simple, quick process.
And also sounds like it's very important to get it done.
Essential.
Now we've got another question. It came on our listener line, and for our listener line that's 028 90 33 83 14 and has to do with student and tax codes. Very important at this time of year. A lot of students coming home who are probably going to be getting jobs, hopefully. Our mother rang in to say her daughter is currently in university and working 2, sometimes 3 jobs. My goodness me. I have never known a teenager to work 2 or even 3 jobs.
That's American.
Now, she says some deduct tax and others don't, and she hasn't a clue how to sort her tax out, or if she even owes tax, or better yet, could she be due a refund? By the way, her mother contacted us in the QT, and she suspects her daughter would be none too pleased that she's raised this question. But it's a good one, as many students have to work and may not know how to sort out their tax. So how do you sort out that if 2 or 3 jobs are being worked?
Yeah, this is a tricky one for students who maybe haven't been around enough corners to know how to get themselves out of this situation, and they can end up paying a lot of tax, which they may get back in the fullness of time, but they would rather have more money in their hands today. The simplest thing to remember is that everyone gets a tax-free allowance. It's just shy of £12,000 a year, but it's 11,850. But you can get that tax allowance. Normally, people have it against their job, and it produces a tax code. But you can actually say to the tax office, I would like my tax code split between these 3 jobs. And if you tell the revenue what you're likely to earn at each job, then they will allocate your allowances accordingly. So particularly with a student, none of these jobs is going to produce a fortune of money. So if she had her allowances given to her at, say, £4,000 for each of them, she might pay virtually no tax. The other thing she must do is set herself up a personal tax account. You do this by just Google personal tax account HMRC, and particularly if you've got something like a passport or your P60, it's very quick. You don't have to wait for codes in the post. And on that, she will be able to see what the employers have told HMRC of her pay and her tax in recent weeks and months, and even in past years. Now, it won't apply to all employers if they haven't registered her as an employee, but she'll be able to see some of them, and she'll know what she's earning at the other jobs. And then she can either, on that application on the computer, tell the revenue, well, actually in this job I'm not going to earn that much, or she can ring up the revenue, but at least she's starting from a position she knows what the revenue can see at their end. So they may be able to see maybe 2 of her jobs, and the other one might be a wee job at £20 a week, and nobody's worrying about tax. But at least she knows, and she can say to the tax office, and I also earn £20 a week at a job that there's no tax taken, and they can correct her tax code. And finally, at the end of the year, she can apply to the revenue to get a tax refund, or to have it all reviewed to check it's all okay.
Yeah. And also, we will be coming back and bringing, Adrian, more of your tax queries throughout the programme, so keep them coming in. Or we've got email on oib@bbc.co.uk. We also have tax advisor Adrian Huston. He's still in the studio with us. Adrian, we're going to rattle through. We have had loads and loads of calls about tax. We're going to rattle through some of them now. A farmer wants to know, and it's a big consideration if you have huge swathes of land, what are the tax implications for signing over property to relatives?
Okay, well, that's quite a wide one. And just before we move on to the farmer, I'll just say that I gather someone phoned in. They didn't like me talking about losing your marbles when I talked about people losing mental capacity. Well, unfortunately, I have made my name in making tax understandable, so I sometimes use expressions that would be in common parlance rather than using formal things like losing mental capacity. So I hope I haven't offended too many people in saying that, and I will continue to try and make tax understandable.
Okay, great stuff.
So as far as the farmer's concerned, if they're actively farming the land, they don't have any real concerns about inheritance tax, and there's no need to transfer it down a generation, for example, because they're entitled to a 100% relief on inheritance tax. So in other words, the value of the farm will not be taken into account when deciding if they've any inheritance tax to pay. If, however, they're what we might call a gentleman farmer, or they just have a nice big house surrounded by a lot of land and they never get their welly boots on and never do anything, then that inheritance tax exemption may not be available to them. Generally, it will not be available to them. And so they have to plan their affairs more carefully and think about maybe passing it down to a generation who may farm it. And at the end of the day, with these inheritance tax reliefs, the more farming activity you can prove, the better. So even if you're a gentleman farmer, if you're still doing work on the farm and maintaining it, that will all help.
Okay. We also have another listener who's called in, and I am a widow as of last year. Does my family home come in for inheritance tax?
Yes, and it is obviously nothing to do with her being a widow. But yes, when you die, it's what you own when you die, plus anything that you gave away in the last 7 years that are taken into account. So if you have a family home, yes, that's part of the sums. But as I said earlier, she does get an extra inheritance tax relief if she chooses to leave that property down to her children or grandchildren or great-grandchildren. And indeed, there is also that relief available if she sells the house, moves into something smaller or moves into a rented place, and then gives the money down the generation. She'll still get that relief, though it's just a little bit less easy to explain. But it is available. But the money or the house has to be transferred down to the next generation. It cannot go to your cousin or your sister or your mother.
You also mentioned gifts there, which comes up quite a bit and on your behalf. You were saying there that there is a time period that you do have, and you were saying there 7 years, anything that's given within 7 years is liable to that tax. So is it, if you've given something that, say, 8-9 years ago, you're okay?
Well, first off, if you've absolutely given it away more than 7 years ago, it's forgotten about. And they say absolutely given away because if you have given away your house but continue to live in it rent-free, then you haven't really given it all away. And it will still fully be in your inheritance tax estate. So to get round that, you would pay a market rent to the person you gave the house to. Aside from that, in terms of gifts in the last 7 years, certain things will not be taken into account. There's quite a list. For instance, £250 to anybody every year. You can give all your nieces and nephews and grandchildren £250. It will never get added back to your estate. £3,000 a year will not be added back. There are gifts when a relative is getting married or a person is getting married. You give them a gift. That won't be added in, but there are limits on these. And there are just lots of little exemptions, but it's time prevents us getting into the detail of them today. It's
very interesting that about the house, because a lot of people think if they've signed over their house, then that means that they've gifted it away. But you say no, under the eyes of the tax law, that's not the case.
If they're still benefiting from it,
they need to pay rent
as a gift with reservation because you've held on to the benefit of living in it rent free.
So they need to pay rent. Another listener has called in. If your house is valued at a certain figure at death and the house is sold at a later date for more or less, is an adjustment made to probate? Sorry, I haven't read that out. We'll do that again. If your house is valued at a certain figure at death and the house is sold at a later date for more, is an adjustment made to probate, or is it just on the valuation figure?
Well, actually, when you read it out the second time, you missed the important bit.
All right.
Because if it's sold at a later date for more or less than the market value at the date of death, because actually this arises most often in the less scenario. So the house is valued at £200,000. Because there's a lot of other savings, there's inheritance tax payable, and then when it's actually sold, they don't get $200,000 for it. So if it's sold for less, yes, you can get an adjustment made to the probate valuation and the inheritance tax due. Having said that, If there's no inheritance tax due and it's sold for less, there's nothing to be achieved. You're just going through a pointless exercise and making people do work and probably having to pay a solicitor to do it. But if there's inheritance tax at stake, it's useful. If it's sold for more, well, you would have to decide whether you want to get an adjustment made to the inheritance tax estate, because if you raise the value, you're potentially raising the tax due, whereas quite often it will be the person that benefits from the house that is then selling it, and it's generally better for them to take the hit on the gain, because they'll be treated as getting it at the market value, and then the rise in value will typically be charged to them with capital gains tax, and they've extra reliefs there. And
Adrian, we're rapidly coming to the end of the programme. I want to get this in, and if you could answer it very briefly. If your child had a business and it went into liquidation, could your assets be taken to cover the losses if he had a power of attorney?
I'm assuming the child has power of attorney for the parent's affairs. If the child's business goes belly up, and I hope I haven't offended anyone in saying that, if their business goes belly up, they can't dip into their parents' assets, and their parents' assets are protected. They have power of attorney to look after the parents' assets for the benefit of the parent.
OK. Well, that's all we've got time for on your behalf this week. All that's left for me to do is thank my guests in studio, Adrian Huston and Patricia Doonan. Thank you so much for your company this morning. And if you'd like to listen to the programme again, use the BBC Radio iPlayer to download the podcast. And if you need our help, then email is the best way to get in touch, oyb@bbc.co.uk. If you're not online, try the listener line on 02890 33 83 14. Next week, the lovely Linda McCauley will be back. So from us, on everybody and on your behalf, goodbye.